Hi, Ron. Excuse me. It's Stuart here today, as usual, but my camera's not on today. It's a long story, but it's just audio. I hope you can hear me loud and clearly. Um, so, what a 24 hours we've had, eh? This time yesterday, this is a euro you can see here above me. What a 24 hours we've had. So basically, Trump has backed down from his saber rattling and his tariffs on Europe. Egg on face. Well, I'll have to take Greenland by force if necessary. He said he wasn't going to do that yesterday. Talks about a framework agreement, but as usual, Trump there's no detail in that framework agreement. A private meeting between the head of NATO and himself yesterday have come to some sort of agreement. Sovereignty is not being discussed. Hamza, hi, my friend. If you want anything any particular asset, any particular time frame, you want my analysis on it, or you tell me how you're doing, how well you're doing, how badly you're doing, anything about trading at all, I'm here to help, basically. So if you're happy doing what you're doing, if you want to share what you're doing, if you're a successful trader, do that as well here. But glad to have you here with us this afternoon. So I say we are the proptrade.com. We are the grown-ups in the prop trading room. Oh, that's why we like to promote ourselves and come and have a go. And we're here to help you be successful, whether you're a new trader, whether you're an established successful trader with a strategy that works for you. Come and share it with us. Join our Discord group. Lively chat on our Discord group. Is our Discord channel here, discord.com channels, and we are the prop trade. Today we're going to be looking at some key data that's going to come out in about 5 minutes time. We'll have a look at the calendar in a minute, but do join us on our Discord group. If you want some support, you want to find out about us, if you want to open an account, get to our website. So obviously the ramblings of the ginger, the orange one, is really moved the market. So yesterday, this is euro dollar. The dollar improved, euro fell all the way into about 7 o'clock last night. There was quite a mark. This is closed yesterday. We were down at 116.70. We recouped about 40 odd pips again. So we're at 117.16. The high for the day at the moment for the euro. So the dollar's rolled over a tad. Still not as high as it was when he started chatting yesterday. But basically, all right, Hamza's saying he's already on Discord. Well, come join our channel. Sorry, that's the reason my camera isn't on today. I'm in my home office today, and our central heating is getting restarted, and the boilers are off, and it's freezing cold, and I haven't had a chance to have a shower, so I look like a right sight. And that's the radiators coming back on. You can hear that noise in the background. So apologies for that. But anyway, major news is that turn down on Greenland. He's had his this morning. He's had his what's he called it? His board of peace. Somebody called it flippantly the FIFA board of trade stroke peace, where people that agree with him have joined his board. Apparently, former UK Prime Minister Tony Blair is supposed to be on it as well. The current Prime Minister, current UK, have turned down being on that board. Apparently, it's $1 billion investment to be on the board of peace. So he's talked about it working in cohorts with the UN with regard to peace in Gaza, which is obviously still not actually physically peaceful. People still being killed in the occupied territories and in Gaza. Anyway, one of his 8 wars, he reckons he's finished, isn't it? So anyway, let's not get off the politics. Let's look at the charts. So euro is stronger this morning, 117.17. Let's have a look at the data we are looking for. It's weekly claims as ever on a Thursday. We've also got GDP. That's backward looking. Let me just find a calendar for you. That's backward looking. But more importantly, later on in about an hour and a half's time, that's a real potential market moving data today. So Thursday, big day. We got stronger, much stronger than expected GDP. Unemployment jobs numbers out of Australia this morning. Aussie rallied quite significant. We're over 0.68 the Aussie this morning. So final reading of GDP. Will it be stronger? Will it be weaker? Remember, claims, weekly unemployment claims have held up really strongly. So we'll see this in a minute. Should we let's just have a look at just bring the chart back up whilst we see this data drop. So it's dropping in a few seconds. So we'll have a look at what that looks like in a minute when it comes through. So we just come back to the 5-minute chart. Remember, with this strategy here, we're looking for a mean reversion. So this is suggesting a nice continuation trade from here as we've moved lower. So euro, we're just using this as an example, using this strategy again. So again, this would have been long from that continuation trade there, that turn. But now this is now looking to go short because it's pushed out here on the 5 minutes. See the compression, the squeeze in the Bollinger Band. Now we've moved out to the upside. And looking for a turn in the mark, so 117.50. So the data's moved. See the move for the dollar. So the euro's topped out here at 117.18, so just shy of 17.20. Still shy of where we started yesterday at 17.30. So just put that in as a little point of reference. The point as the first major data of the day came out. That's our high of the day. If we go back to last night, so this is our low of the day down here. So we're at our high of the day, and then we've turned down from there as the data has rolled out. So you would expect, if we go back to the calendar, see the headline data. So there we are. Strong jobs again, claims holding at 200,000. Unemployment rate, the final GDP better than expected at 4.4%. That'll obviously get mentioned out of Davos this afternoon from all the president's men. And that's, again, good numbers for the US economy, and 3.8% for the price index. So, again, that's a re-reading. It's all data. You can see here by the data, it's like 40 odd days. There we are, 34 days late. Final reading of fourth quarter GDP is also coming out a month late, 4.4%. But again, it's higher than expected, but it's it's really backward looking. Remember, it's normally, as it says here, about 80 days after the quarter, but it's 34 days plus 84 days. So it's really, that's not going to move the market, although it's better than expected, a tick better than expected at 4.4%. Compared to 4.3%, and jobs again remain really, or new claims remain very robust. So the tight jobs market, GDP and the jobs as well. Hamza, really is they're both they were expected to be around about in line, but that again, it's this jobs number I think is rather than the GDP revision showing the robustness of the US jobs market. You can see here on this calendar here, 200,000. It's a really strong number, bound from this worry about everyone's talking about moving up. Jobs claimants, new initial claims for unemployment remain quite low. So the jobs market remains relatively tight. But we got this divergence, like we saw yesterday in the UK jobs numbers. We got this divergence where those that have got a job are doing quite well. Earnings are doing relatively well as well. So the idea of layoffs isn't really gaining momentum, but job openings aren't particularly there. So we got this relatively sort of somewhat imbalance, you could argue, jobs market. So from the fracturing or the worry of it, is still holding up. So a remarkably resilient jobs market in the US. So that could add to more charges or chance for cuts in interest rates in the United States. So yes, it's lifted the dollar. We hadn't this strategy here hasn't actually crossed yet although we've perched out we're looking for a cross and for this to start moving down to take this short. So we've euros moved, oh, the euro dollar moved down to a tad to the 5 minute midline of the Bollinger Band, but we still remain uptick for the day. Let's have a look at some other markets. Crypto yesterday under 90,000, remain anchored under 90,000 Bitcoin. I'll just take this up to the hourly chart. There we are. So again, this is where we were yesterday. We were lower. We went low, but then recovered uh, yesterday. But the key thing is that we're under the 92,000 handle and have been for a day and a half now. And we're 2 days under the 95,000. And we're also anchored under 90,000 at the moment. So the fall in crypto is hanging on, is in place, or the rejection of the move up is very much in place. So two big down days earlier in the week. A little bounce yesterday, we were under 90,000, and we're still under 90,000 now. But the key thing, as I said yesterday, we're still back in this key channel now, and consolidation, sideways movement for crypto. So buying opportunities for many, the big believers at this 70, 85,000 level, as we saw with strategy last week in their earnings numbers. But sideways action. I ended up flat in the end on that long position I'd taken on Bitcoin, trading it last week, and down we go, and back down we go into the channel. So just sitting and watching any more trades on crypto. Energy today has actually picked up. The oil market picked up a bit today. Um, sorry, picked up yesterday, held 60, but today we've reversed. We've come back under the 60 handle this morning. So we picked up yesterday on some expectations of some, the uncertainty around about Greenland. Trump turned tail, and we've moved down this morning. Obviously, the next market or issue is the Ukraine and Russia. Zelensky apparently is in Davos this afternoon. Witkoff, Trump's golfing partner and main diplomat, along with his son-in-law Kushner, are going to see Putin today, apparently. So we'll see how all that pans out. But that brought the oil market, which is really in a down spiral anyway, back into focus. So we've had this continued move down. We found some buyers at 55 and 58, and we're reluctant to try and hold over $60 a barrel for the oil market. So I don't know how you actually trading oil, but again, another bit like Bitcoin, more sideways than trending, to be honest. So although still, you could argue bias to the upside from the beginning of the year, from these lows at 55, $56 we went to the beginning of January. So support area at 58.70, it's under 59. So still a dip down, can't be ruled out again for the oil markets over the next few weeks. Indices, we finished positively yesterday, quite significant. We were up 1.16% for the S&P 500, up 78 points. We closed at 6,875. Futures this morning over 6,900. So big bounce back yesterday on the reversal of his Greenland tariff threat to Europe. And we're up again today, so that's looking relatively positive for potential trades tonight, having got hit quite badly yesterday. We were short the Dow yesterday. I don't know if it's still, yeah, there we are. We came within 10 points of our short target yesterday. We went to 48.13, our target, or 48.11, our target was 48,311, our target was 48,301. You can see that there. And turned around and we were stopped out, quite a hefty loss, 600 odd pips. So we points. If we try to bring in, we're definitely in the black. Sorry, in the red for January so far, there's, yeah, 634 points we were down yesterday. A big 1 and a bit percent loss on that Dow trade. There we are, 556. Our stop losses actually hit yesterday. The forex markets weren't much better. Stop losses were hit. Interestingly, I closed out the Aussie. I think it was on. I think it was a bit of a knee-jerk reaction to having a bad day. If we'd left that, we'd got another 40 odd pips. But anyway, it's 40 pips out of 600 and change the marketplace, is it? And there was interesting. There was no triggers on my end of day trades last night. So 634 points in the black yesterday. We must be down something like 800 points or 700 points. I didn't actually do the maths last night. 700 points, I think, for the week. Not a great start to the new year, but that is trading. Take it on the chin when you're winning, and when you're losing, got to treat both of those the same. So that was that plethora of yen positions we had yesterday, which were okay, but some of the others were stopped out early in the day. So bad day yesterday, but that happens. It's as long as you understand why and accept it and move on. That's trading. You keep your losses small. As I say, that the Dow numbers. I mean, it's huge, isn't it? 568 points, but it was little over 1% of the position. So as I said, take it on the chin. And if you're successful, put your options in here, Coach Chambers and Remit. Do have a bit of explanation rather than just these charts, guys. If you're going to do this, why you got in, what you triggered, and what the time frame is. Not very clear from the time frames here, is it? What time frame? What's that? Oh, that's 4 hours. Fair enough. I'll let you off there. 4 hour. It's long, isn't it? And that was before, and that's after potentially. Some of it's, make sure it's legit. There's so many scammers in this business, guys. I actually tell you, the price I've been filled at, and most nights when we got trades on. So do come and join us, Hamza and others, if you want. I don't know what you're doing, but anyway, let's get back to the charts. So the Dow, all the US markets are up this morning pre the open. Another hour to go before the open. So Dow's up there. The Nasdaq here on the daily chart, and a big bounce from this 25,000. There's the low. That's a really good example of how these moved the market. It started speaking at the low. This low we got to here yesterday was we haven't seen that since December the 18th. So it was a significant area by the dip. How much inside trading is going on here? For those knowing what the president's going to do, who knows? But anyway, so Nasdaq up significantly yesterday, and we are now back into the up half of the Bollinger Band here on a very flat channel, sideways channel here on the Nasdaq. So we're in the up half of that channel again, but we're still not back to all-time highs. But we'll see where we go. So you see where we're, a bit of a leg down as having had a very, very strong rally up, and we're in this channel now waiting to break one way or the other. But you can see it's a bit of a wedge form there. That's those highs, just can't get back to where we were here. At the end, this is all the way back at the end of October now. These are all-time highs on the Nasdaq. So the 11th of December high was tested again here at the 12th and 11th of January, so a month between the two. That's quite a good double top, if you like. Lower than the October, so it's suggesting, maybe, but there you can see that what would have been trend line there. Just draw this. I should draw it with a big blobber, I think. Highlight. You can see this trend line here. Nothing goes in a straight line. That's been breached, hasn't it? On again, tariff worry from the president. So that's been breached to the downside, but we're back into it. So we want to be back up here, and then the key level is this. This top purple line we got here. This 24,700. It's a bit messy. That I should tidy those up, but you get what I'm. Hopefully, you get what I'm talking about there, guys. I don't know. Lobbing stuff. So anyway, let's see where we go. So yeah, anything could happen. Obviously, um, um, obviously the geopolitical situation is driving things. I said today's agenda has been that is peace board for Gaza. Uh, People that paid to be there, governments that paid to be there, and so hopefully some resolution to the Ukraine-Russia situation. But Putin's in no rush to join that. But we're playing this is his ninth war. It's fixed, even though he was in fight. So anyway, Hamza, what are you saying here, my friend? Next week I'll get my first payout after learning 2 years of trade. Excellent, Hamza. So what's the one, Hamza, my friend, what's the one key thing you would say to a new guy that's starting today? What's the key thing? What's the one key thing you've learned about yourself and about trading over the last 2 years? It's taken you 2 years to get a payout. Or, one or two key things that you'd say to a completely newbie today. Share it with us. I'd be interested to see what he's there. I know what I learned very, very quickly. So tell me, tell me what that is. So stocks that remain bid after yesterday's turnaround by the president. So Nasdaq up, the S&P we have to look at, and the Dow up. In Europe, the DAX is also stronger this morning. So that's the bounce. Well, it had been stronger. It's actually this is the daily. It's moved back down again this morning. So that's the move last night up. Pre-market high was hit at 4 o'clock this morning. Pre-market low was just before we opened this morning. I think it's 7 o'clock, and then we were. I was trading this on the 5 minute time frame this morning. We did okay this morning. We've got a long position here, fit in the market really nicely. We rallied that to there just on open. Stop loss was there initially, came back to test it. We went high and then we rolled over again. Then we took that leg up as well. I caught that leg down and then I went out. The engineering was here then. So we've had 3 successful legs caught on this 5 minute rally. Move. Yeah, Hamza, thank you for the feedback. Use stop loss. Whoops. There he is. Hamza, I asked him what was his one or two key rules he's learned, or you'd say to a newbie today, and he says, use a stop loss and never move your stop loss. Absolutely. The other thing I'd say, Hamza, as well, that's a lesson I learned very, very early. I've seen tens of thousands, not hundreds of thousands of trades of different traders over the years. And one of the key things that people that lose have in common is they tend not to use a stop loss and to take profit. They think they know better, they think they can do it automatically. If your stop loss is set and you know how much money you're going to lose, whether it's a percentage, I always try to think in percentages or the dollar terms, and you're comfortable with that, that fits your risk profile, you live to fight another day because you have an awful lot of losing trades, don't you, Hamza? We all do as traders. And if you're kidding yourself, you think you don't, you're only worrying about the winners, you'll never move off first base. You'll never move forward. You'll never make it in this business. You've got to accept that you get lots and lots, excuse me. That's the other thing. I've got a bit of a cold as well. I look terrible. You will never ever move off first base. So you've got to accept the losing trades. If you keep the losing trades small, i.e., 1 or 2% of your account, you live to fight another day, and you live to analyze what went wrong. Why did I get this wrong? You give a chance because you're dealing with real money. And the beauty of the prop trade is that you use our funds, and the profit you make is real cash, real dollars, real fake currency, real cryptos, or however you want to, however it's withdrawn, whatever you want to do with it. But yeah, having a stop loss and accepting that's going to be a 1% loss. If it hits it, so be it, and I move on to the next trade. Yeah, excellent, Hamza. Thank you for that input. Really appreciate it. So, and again, that's regardless of what you're trading, regardless of what time frame you're trading, regardless of how you trade, whether it's with old-fashioned indicators like I've got on my chart here, Bollinger Bands and stochastics, or you're using SMC, or you're just using pure price action. You don't use any charts. You just use an order flow. Whatever approach it is, whether you're using 5 minutes, 4 hours, whatever it is, whatever asset, whatever time frame, whatever approach, the psychology of trading is what separates the winners and the great winners and the great traders from the average traders or the losers. Still lots and lots of people trade. The vast majority of people that try this give up too early because they can't accept losing. They haven't really got an edge. They haven't really got a strategy. They jump in, they see the price moving around, they think, oh, that's going up, I'll buy it, and immediately it goes down. It's just, it is what it is. I hate that phrase, but I've just used it. I've just used it there. I mean, something as simple as this, the highs and the lows of the day, or the highs and lows of the pre-market before they test it. We've had that. That was at 4 o'clock, and that was again at when the market was open. This is at 9 o'clock. So sorry, 9:50. So clearly, the market doesn't want to go any higher. Possibly as well, the market doesn't want to go any lower because this is pre-market at 7:15, just before the market opened. That's produced its low. Remember the cash market here. This is the DAX, the German stock market. Great one for trading on an intraday basis. Um, didn't want to go any lower. It looked like here at lunchtime, 1 o'clock my time, 2 o'clock in Frankfurt, that it may want to go lower again, and it's bounced up. So clearly, there's some sort of support today around this number, or around this. Where is it? Where are we? Well, it's 24,800. Say roundish number. The top is 24,930. So the 200 point range on the DAX today, and there has been since yesterday, hasn't there? So that's no. Is it interesting? So basically, what's this telling us? Well, the rise in stock markets following Trump's reversal on Greenland has held. So we're still where we were yesterday. So therefore, we might be looking to go higher if we break out of this range. So just watch that. So what's happening now is people are buying at the bottom and selling at the top today. You can see that, and you can see that in stochastics. So that was halfway down. See, it's halfway. If you haven't quite went up a wee bit again. Down. How the stochastics fit in with the movement of the price action there. So anyway, that's just that particular side. Hamza, thank you very much for that. Anything else you want to share with us? Setting targets, or what strategy you use, what time frames you use, what assets you trade. Because some people just trade one particular asset. From my own personal end of day trading, I'm scanning 50 assets, all the forex pairs, gold and oil and the indexes, and system triggers to go. I go, and if I win, I win. If I lose, I lose. I just know that because of my position sizing, I know when I lose, it's not going to be, it's not going to break the bank. When I'm winning, I just add to my position or let it run beyond, my first initial target, and that's my approach, and it's worked well for me over the years. So, find what works for you guys. It really is the trick to staying in business in this business. Anyway, let's just where were we? What's this? This is DAX. We looked at the oil market, didn't we? We looked at the indices. Let's pop back to euros. See how it's on this 5 minute time frame. So there we go. So that was remember what we said. That's the top head of the data. We moved down, but it looked like it was a minor move, even though the GDP was better than expected. The jobs remained very robust at 200,000. The bias to the upside is remaining. So again, if we come up the time frames this time, so yesterday we were up here, so we could see that is some potential, some sort of upside target, 1730, this first purple line here when Trump started talking yesterday. So that breaches, we're off and running again to the upside. So the move down on Trump's speech turned around on the breaking Greenland deal, and again back down on the Greenland deal, and euros ticked up again there. If we look at the other dollar cross, as I said, USD, The Aussies had a really good morning on that strong jobs data. So that was our first target. This was yesterday, and I closed it out last night here. Who knows? So it was a bad day yesterday. So we obviously made money on this one. I made money again on the second half of it, but it was in. Again, it was in. It was going in my direction. It moved down ultimately from our target one, and I'd moved the stop loss up really aggressively. I normally just moved it. Well, I did. I initially moved the stop loss to target, so it would have been there. And then what I normally do then is look at the not the 1 hour, but the 4 hour trade because this is an end of it was an end of day position, and then sort of moved it up. I think it might have been initially there uh, um, yesterday. Let me just check. Still shy of the. Oh, that was earlier. That was yeah. I think I had moved it to there after it hit target one earlier in the day, but then it sort of drifted down, and I was scanning late last night. I was scanning all. I'd moved it up later in the afternoon after we spoke yesterday. So that was the 12 o'clock. That was the 4 o'clock. So I'd moved it up as after this webinar yesterday, or this broadcast yesterday, quite tightly, and it got stopped out. And I can't remember when I manually closed it. I got stopped out, but anyway, the point is, it was actually in the money. It already hit target one, so it should have just been left and to see what happened, and I'd not got too tight with the stop loss. But anyway, it did. I used the 1 hour chart, not the 4 hour chart, and it got stopped out. So obviously the news, obviously the risk of the news could be the other way around. So um, it could have been stopped out for less. But anyway, we're up and over 68. The key for the Aussie is we haven't been over 68. Look at the daily chart here. We haven't been over 68. Here's the 68 here. You can see it going. This takes us all the way back to September. Look at the weekly chart for when we were last over 68, and it's going back a long, long way. So the Aussie is at highs not seen since October 2024. So a long way back. And point of note is that the last time we went over 68 only lasted a couple of weeks. So this is a strong rally we're still on. So the Aussie is bid. Uh, Obviously, the commodity rally in silver and gold is helping the Australian dollar as well. But those strong jobs numbers is also helping the Australian dollar. So stay on this one as well. I jumped off a wee bit too early. What a very, very strong week the Australian dollar's having. This is Monday down here. We were under 67. We went as low as 60, 66, 68 on Monday, and Tuesday, Wednesday, and now Thursday, smashing through got 68 with strong um, data for the Australian dollar. Canadian dollar 138. Mark Carney really hit the nail right on the head yesterday, calling rupturing uh, of the relationship between Western allies. He's proving a really, really good politician, is Mark Carney. I had a lot of time for him. He got a lot of criticism in the UK as Bank of England governor, but I had a lot of time for him. Told it as it was, and he did stand up to Trump initially, then kowtowed a wee bit. But great speech earlier in the week, I thought. Yes. Hamza, can you tell me what is gold fair value? That's a great question. All commodities flying high. Is there something retail traders do or not? No, there's no. I mean, it's a trend. I mean, the structural changes that's caused the gold move, Hamza. Let me just bring this up. And silver's, even more so. So if we go back, just put the weekly chart up here. I mean, last year there was the 2025. There's these massive moves. So I mean, it's been in a steady uptick, isn't it? This is the winter of 2024. So 2 years ago now, we were down here at under $2,000. But the tick up has continued. So there's lots of structural things like central banks and countries purchasing and holding gold. Once bullion is purchased by central banks and governments, they tend not to let go of it. They're not like those retail traders, buying and selling the derivatives. This is physical bullion that has to be stored somewhere securely, has to be transported from vaults and all the rest of it. So it's not the sort of thing you offload quickly and and sort of just on a bit of a whim. So these are structural changes in their holdings of gold, and a lot of it's to do with the story of the de-dollarization, the weakening of the US dollar and moving out of the dollar denominated trading regime, if you like. So the rise in the extent of the emerging markets has been one structural function. And then there's been the worry about all the geopolitics that's been going on over the last couple of years as well. So that's sparked it. But that still doesn't sort of justify this parabolic move we had from September. You can see here that we were steady here from through the mid half of sort of from April to September last year. And then again, more structural changes in worry about global debt. I mean, it's been kicked down the can, yeah, I can say generation for generation. The treasury markets, the bond markets, the government bond markets. So all of that worry has had to, the demand for gold as a safe haven, and it's been, historically, it's been the ultimate safe haven. So that's added to the rally. The enormous, it's less clear that worry hasn't really gone away, but it's less clear perhaps why we've had such a phenomenal rise at the beginning of 2026, like we've seen in gold and silver. I mean, silver in particular, 93.50 this today. If we again look at the silver market here, it's even more parabolic than the gold market. So, and this is both a precious metal, silver, as well as an industrial metal. So it fits in both categories. So it has the appeal for jewelry and collectibles and all the rest of it, but it's used very much in industry as well. And obviously the AI boom, the software technology boom, needs to be powered by infrastructure. So copper is at $13,000 a pound. Copper cables to create the power. Very disjointed and fractured power plants in the United States, in particular. One of the things Trump's allowed is these massive data centers to build their own power plants. So the infrastructure hasn't had to have the upgrade that it's desperately going to need, or will need. So that's explains some of the demand, and silver is one of those key industrial metals that fits in all of this AI boom. So the software drive, this AI bubble, or ultimately will be a bubble, but the amount of money that's being spent is absolutely eye-watering, and there's no sign of that faltering at the moment. What we might see over this year and going into next year is, the returns on this huge investment. Are they coming? Are the productivity gains from companies actually affecting the bottom line? But at the moment, fourth quarter earnings have all been, very strong. Again, we got 80 odd percent of companies beating market expectations for their earnings so far this year. And again, it's still driven by the huge tech companies. They report in a week or so. So it'll be interesting to see how they come out. But, using Netflix as an example of it, I mean, it's not part of the Magnificent Seven or anything, but it's demand driven, and their shares have moved really aggressively. But then they came down really aggressively on the earnings because of the weak outlook and the squeeze on margins, and subscriber numbers were actually better than expected, but it still got tweaked a bit. So there's still a bit of nervousness around there. But this absolutely crazy move is just something just to sit on. So that's the weekly. And again, this year, just going back to this year for silver, there's been no hold up in its charge upwards. So 95 is its current level. So not really, Hamza. They are flying, and it's all to do with safe haven demand, as well as structural changes in governments and central banks are holding the key assets, but you don't normally get the stock markets rallying like they have. Admittedly, we're excuse the S&P, um, we're perhaps stalling, but we're stalling at highs. It's still a strong move. And then the argument is, well, that is therefore, if you look at the dollar, um, it's the further decline in 2026 of the dollar going forward. So hence the hold up in commodities. But again, against the euro, it'd be a sort of bit range bound again. The wider range here from middle of the year, 116, 115, 119, the top. But that his expectations that might fall again. So yeah, just again, as a trend following trade as I am, whatever your timelines are, and as retail traders, obviously it's not long as these major investors, but just follow that, try and follow the trend. So the noise hasn't changed. That we are expecting a weaker dollar. Commodities have been the major beneficiary of this shift away from the dollar and the structural change, which has helped that keep that momentum going. And the tech stocks are the ones that are really driving the tech markets. The flip on the other side is that inflation could come back and be well. It is sticky. Let's say it how it is. It's not. It's still sticky. It's still hanging around. Obviously the upheaval we've had with all the tariff noise, but that's many people saying, well, that's now in because it was they started to come to feed through in April. We haven't seen the tick up or significant rise in inflation that many were expecting. But we haven't seen inflation fall to the levels that the president thinks are at. And average Americans are still, some of them are still quite struggling. Housing is still an issue, and prices remain an issue. So they say mantra that inflation's gone away and energy prices are coming down and going to undermine that. Yes, that will happen if that trend continues, and it's expected to from the energy prices point of view. But food prices. Remember the image from the that we for my YouTube channel. I think I'll find the picture. The people that are paying these tariffs are the importers, and they either absorb that or they pass it on to consumers. So at some point there might be still a significant impact on inflation that still lagging. So although we're 8-9 months into it, there's still potential for that to still tick through. A long time ago, I'm trying to find a picture that we used. I used. Um, for my screenshot today. I can't. Actually, let's find the YouTube channel. There we are. That's what we're live now. This is the picture I was trying to show you. That's me. Sorry. It's just a picture I want to show you. There we are. So you can't see that, can you? No. Oh, but basically, this is something that Goldman Sachs did. 65% of who's bearing the cost of Donald Trump's tariffs. 65% of businesses, 35% of US consumers at the moment. So that's playing through into the US market. There we go. That's my take on it, Hamza. Whether it's right or wrong, that's my take. So interesting to see what you think about that. Where are we? Let's have a look. That's the forex market. So dollars continues to weaken on that data. Gold's holding up, and indices with about 20 minutes to open are all positive so far today. Let's have a look at the Nasdaq. Yeah, positive today. There's an update, so nothing's changed in the last hour or so. Hour ticking, there we go. So I'll continue to tick higher today. So what's left today is the key inflation data that's coming out, the core PCE. This will be interesting as well in an hour's time. So we'll have a look at that and see how that affects things. So this is a next key data, core PCE price index. Remember this is the measure of prices and inflation, goods and services in the United States that the Fed hold dear. Not CPI, not PPI, but the core PCE price index. See what that looks like later. Lots of data within that, and obviously there's old data coming out as well. The October number was way, 57 plus whatever it is, the release. So we'll see if that is still as benign as the as other measures of inflation are, or are we going to see a feed through? If not, the story about the inflation impact of tariffs is already in and being priced. That again is the sort of thing the US government, are looking to hear and proving that you may have caught it. Uh, Maybe right on that, but I said time will tell as ever. So see what this looks like in about 50 minutes. So if that's all from everybody, if anybody wants to have a look at anything else, let me know. Hamza, thank you for your input today. Um, we will wrap it up now. Tomorrow, I'll be around for a wrap up of the week. Obviously, there's lots going on still. We're still in Davos. The PMI data starts rolling out tomorrow overnight. We got the Bank of Japan rate announcement. No change expected there, given that there's a incoming election on February the 8th, and Parliament gets wrapped up tomorrow. It's the last day of the lower house of Parliament in Japan tomorrow. But see what the Bank of Japan have got to say about expectations, really, of the potential to actually raise interest rates. Remember, the fiscal policy has come under question in Japan with the new prime minister. She's looking to stimulate the economy like not seen for a long time. We'll see if it works out this time. A Japanese economy that's been moribund for something that feels like forever. So that's overnight. And as the PMI data across Europe, more noises out of Davos tomorrow as well, and retail sales numbers from the United Kingdom and Canada tomorrow. So quite a busy end to the week. It looks like I'm going to end up out of the money for the week, and so far for the month as well. But one more week of January to go next week. So anyway, I'll see you tomorrow, Friday. Take care, be safe, and all the very best to you all. Bye bye.